Welcome to this educational video on the relationship between global dollar liquidity and Bitcoin's price movements. We will break down key financial indicators that influence dollar liquidity and explain how they impact Bitcoin and other risk assets. Whether you're a beginner or an experienced investor, this video will provide a clear understanding of these macroeconomic factors. What is dollar liquidity? Dollar liquidity refers to the availability of US dollars in the financial system, affecting global markets, including cryptocurrencies. When liquidity is abundant, capital flows more freely into risk assets like Bitcoin. When it contracts, markets can experience downturns. Key indicators of dollar liquidity. 1. Federal Reserve Balance Sheet, Fed Balance Sheet. The Fed's balance sheet reflects its monetary policies. When the balance sheet expands through quantitative easing, QE, more dollars enter the system, boosting liquidity. When the Fed tightens through quantitative tightening, QT, liquidity shrinks, impacting risk assets. 2. Reverse Repo, RRP, and its impact. RRP is a tool used by the Fed to absorb excess liquidity from the market. A rising RRP balance indicates banks are parking their excess cash at the Fed rather than lending or investing, reducing liquidity. 3. Treasury General Account, TGA at the Fed. The TGA is the U.S. government's main account at the Federal Reserve. When the TGA balance rises, the government is holding more cash, withdrawing liquidity from the economy. When it decreases, the government is spending more, adding liquidity. 4. U.S. Dollar Index, DXY. The DXY measures the strength of the U.S. dollar against a basket of major currencies. A stronger dollar usually signals tighter liquidity, while a weaker dollar indicates easier financial conditions, benefiting Bitcoin. How dollar liquidity affects Bitcoin. Bitcoin has shown a strong correlation with global liquidity trends. When liquidity increases, investors seek higher returns and allocate capital into riskier assets, including Bitcoin. Conversely, during liquidity contractions, investors move towards safer assets, leading to Bitcoin price corrections. Practical insights for investors. Monitoring these indicators can help investors anticipate macro-driven Bitcoin price trends. Understanding liquidity flows can provide an edge in navigating both bullish and bearish cycles. Where to monitor dollar liquidity indicators. Federal Reserve Balance Sheet. The Federal Reserve publishes weekly balance sheet updates in the H4.1 report, available on the Federal Reserve's website. Reverse Repo, RRP. Daily updates on RRP operations are provided by the New York Fed. Treasury General Account, TGA. The TGA balance is updated regularly on the Treasury Department's Fiscal Data website. US Dollar Index, DXY. Real-time and historical DXY data is available on financial platforms like TradingView and Investing.com. Conclusion. Dollar liquidity plays a crucial role in shaping financial markets, including Bitcoin. By tracking Fed policies, RRP, TGA, and DXY, investors can better understand macroeconomic conditions and their potential impact on crypto markets. If you found this video helpful, consider subscribing for more insights on global finance and Bitcoin market dynamics. Stay informed and trade wisely.